Yo, what's good, YouTube? It's Mr.BuyTheDip back here with another video. Couple of concerns, couple of topics I wanted to touch today, touch bases and talk to you guys about. Number one is how you can make a lot of money with penny stocks. Penny stocks is something that is not really on Cash App like that. You know what I mean? Penny stocks are basically stocks that are very cheap in price. Okay, 63 cents, 5 cents, 20 cents, And these type of stocks, when they go up even like 6%, if they go up, if a stock is 61 cent, right, and it goes up to, let's see, 62, right, and it goes up to 66 cents, you get a lot of, money back. Now, I wanted to experiment and I wanted to do some type of, I would say, what can I say? Like just like a rough test. I just wanted to throw in $2 and get the education and get some knowledge on this. I bought $2 for 235 shares. At I bought this at 61 cents. Okay, so we can see when I bought it, it's all the way right here. Can we see how low that is? That's perfect. Now, it would have been better if I bought it 60, but that's pretty low, so I'll take that. Now, the ultimate goal was for it to go back up to 67, right? You guys see that peak, but I knew it was not going to go up that high. Just based on what it's done over the past months and stuff. Because we can see when it breaks, like, when it goes like 67, 68, it comes back down, okay? And that starts about right about here, okay? And it hasn't went up since then, guys. June 21st. Okay, I looked at this. I told you guys, look at the history. Look at the previous marks of stocks and look at where is the margin that the stock has to break. Right now, the margin is about 67 to 68 to 69-ish cents, okay? Those are prices we have to pinpoint. And if it breaks those barriers, hey, we're flying, okay? And today, I was like, let's see if it breaks 68. Let's look, guys. I was like, let's see if it breaks 67. You guys see that? I didn't sell right there because I thought it was going to break it, but it didn't break it. It goes back down to 66. And I'm like, you know what? I'm just going to sell. I'm going to take my profit and sell. Now, I put in $2. When was it? Tuesday. Now, we come to Thursday, 2 days later, I'm at $2.15. Now, imagine if I had like $100, $50, $200. I would have made like, 10 to 8, I don't know, 12, probably 50. Like, I would have made a decent amount of money and I would have learned something from it. Okay, what I learned from this is we have to be patient because right about here is where I was like, oh my God, this is going to just tank, right? What I could have done here, though, I could have bought more, I could have bought more stocks for the lower share price, and I could have waited for right here. But it's good that I just hold. Guys, this margin, you see this where it's plateauing at 63, then when it dropped to 60, and then when it drops to 60 again, people, they panic around here all the time when they have big amounts of money in their stock. It's very important we don't do that, right? So that's what I did. I just invested $2. I held it when it went back up. I sold it at $2.15. And I took the profit. So that's it for penny stocks. That's how I deal with penny stocks, and that's something I want to talk about. Now, second topic for today is Broadcom. I've just got news that Broadcom's with plans for a stock split. I knew this was coming. Broadcom is currently down, and I think they're gonna do a pretty good stock split, at least $200, okay, per share. I think at least 200 to 150-ish. That sounds like a good split. 150 to 200, that's a perfect split, okay? And I'm gonna definitely get into Broadcom. Dividend yield is decent. Their their volume is decent, and their overall growth for the past year. Let's look at that. How about that? You know what I mean? Around this time next year, we're gonna be in good hands probably. So I'm definitely looking to go into Broadcom. Keep this on the watch list. Let's wait for that split because that's what I'm doing. I'm going to wait for that split, and I'm going to go in for sure. The split is going to probably come in a week or two. Okay, probably sooner than later. Okay, because you got to keep this one on our radar and just watch that split. And then same with Nvidia, you know, when companies do splits like that, they might want to sell their profits a little bit and, you know, take some of that money in. That's what Nvidia did. That's why we had like a downfall. We were in the 120s. We hit 121. But that's all right with Nvidia. You know, my margin with Nvidia is about 6 months. Like, I'm hoping by December, you know, this is one of my biggest margins. I'm hoping by December I at least get a $25 to $30 gain. And that's if I only have $73 invested. I'm going to put more money in there. Probably 80 more, 20 more, I don't know. You know, we're going to keep adding money as the year goes by. And just keep Broadcom on our watch list and be in mind of more penny stocks. I really hope I can find more penny stocks, but something you can substitute for a penny stock is Xping, I think. I don't know what this is called. This is it's always fluctuating. This could be very profitable. When it comes to around 7.5, you can buy and then sell around like 8.7, 8.8. But, you know, I would get into Xping or Nano if I want to just play around with $100 or $50 or $60. And I would get into Nano around 7.5. So probably 7.5, 7.6 is when I would get in here and sell at $8. So, hey, these are not really penny stocks, but they're stocks with prices that are really low, like 15, 20. So when they go up even a little bit, you get a lot of gain. Okay, so I like playing around with these type of stocks, but these are not like long terms at all. I'm not looking forward to keep those. But yeah, that is it for the video. I just want to talk to you guys about how you can use penny stocks to profit. You know, short. A lot of investment, a short investment, you can get more profit. You can do a longer investment with more money, and that could be more safer. But penny stocks can be very risky. You got to keep that in mind. Another short-term investments could be riskier than just a regular long-term. That is it for the video, guys.